What's up, everybody? Just doing the weekly roundup of the trading 212 portfolio. So we're just going to get stuck in straight away. So in terms of top mover, we have Barratt Homes, which are up 1.75%. That's on this particular week. So you'll have a look here. Obviously, that has given us a return of 23p, which isn't exactly exciting, but bear in mind I only hold 2 shares with them. So it's up 1.75% since we've started investing with them. What I would say with them, having had a look as to the reasons why, I suspect that it's probably due to 30th of December. Various articles, including on the BBC website, Financial Times and so on, have shown that UK house prices have seen the highest growth in the last 6 years. They're off on average 7.5% in 2020 year-on-year growth. So that's obviously boosted share price of Barratt Homes. Having compared that to Taylor Wimpey, I understand they have recently announced some layoffs and restructuring plans. So obviously you see here their share price is down 0.6% since purchase. Obviously it's only 2p, but that will show you the difference between those two companies, because broadly speaking they're in the same industry. They're house developers. Some will argue one is better quality than the other, but obviously essentially they are doing their same role. Now another top mover is Cineworld Group here. They have announced that they are going to aim to reopen in March 2021, in the last week or so, and also listed in mid-December a bunch of confirmed films which are due to come out in 2021, confirmed releases. So I suspect their share price is up a small amount. Obviously they need to get their actual cinemas open, and I suspect that will hopefully recover, as I've mentioned in previous videos. I think whilst they're probably struggling a little bit, and it is obviously a high risk stock, my personal opinion on it is that it was probably a good decision for them to close up shop. Obviously, as per the descriptions below, and as I mentioned in every other video, this information and these reports are really for entertainment purposes only. If you want to learn more about investing, please feel free to watch the other videos, but they are all for entertainment purposes, so you need to seek your own financial advice from an independent person if you are seeking to do this, or you are in need of further formal advice. So we've also got AGNC Investments here, real estate in America. Doesn't really tell me much as to why, having done some research as to why they are down, but it is only 0.39%. So all in all, you see reasonable growth. Obviously, interestingly, and a point I would like to make is that you'll see at the top here that the return is now £3 and 2p. Yet only a few days ago I was making a video harping on about how I had £8 worth of returns, and that covered my mobile phone bill for the month and so on. But this is a really good example of how markets fluctuate so much. That has gone down £5 in the last few days. Now it's not big fry in the grand scheme of things of life, but obviously you should never expect to continue to always make money. The market does move up and down, and that may be in the red next week, or it may be in the green again. Depends on various factors, social and economical. So I thought that was a pretty good roundup of the portfolio for this week. I did buy a full share in Apple just before Christmas as a little treat to myself. I feel that that was probably a good investment over just wasting it on a load more alcohol for the festive period. It gives me a dividend yield of 0.7%, so obviously for every £100 I hold in there, they give me 70p, which isn't a great amount, but alcohol is obviously drunk and then gone, as opposed to this, which I hold for life, or until such point as I decide to sell it. Share price is up slightly since purchase, but that's it really. So if you want a free share in Trading 212 or would like to open an account with them, if you go to the description below, there is actually a link to this promo code here. Sorry, not this promo code. Where are we? Get free shares. So this particular link here is down below. If you click on that, both of us get a free share once you have deposited funds in your account. It could be worth up to £200. Generally, when people are using this link, I'm receiving the same share as what they're receiving, but it's between £8 and maybe 15 quid. So for example, this 2 shares in General Electric, that is what I received recently. So that 2 shares in there, £15.77. I have got those from people clicking on the link, and I believe I got a Wells Fargo one as well, which was £22. So giving you're kind of between 15 and 22. Between 8 and 15 quid, depending on which way you look at that. So that's our update. Again, if you'd like to like and subscribe, please check out the links below as per the descriptions. If you need free shares or would like a free share or whatever, or links to various books and other affiliate commission based bits below that help support the channel, please do like and subscribe, share the video, comment below. I'm aiming to do one of these a week, just a sort of recap or a round off of the week's events, and then obviously any new shares that I've purchased, like for example Netflix here. That is a new share. Okay, this is a classic example of fractional shares here, so I have only bought a very small percentage. As you can see, it's $541 per share. I've bought a 0.052 share at £20 worth in Netflix there, as a growth stock for me, as opposed to one that would pay dividends. Anyway, as I say, if you would smash the like button, like and subscribe, and share the channel, try and help us grow on a goal. We seem to have leaped from only a handful of subscribers up to about 20 now, so if we can get to 50 by the end of January, I would be absolutely over the moon. So let's see if we can get to that goal. Anyway, if you've got any questions, please do feel free to comment below, and I'll see you next time on the Trading 212 portfolio update.